Alright, boys and girls, we back 2 videos in one day. Now, I'm probably going to be doing a lot more YouTube videos, but I have to get on a content stream essentially. So I'm trying to build a little bit of a content for you guys. I'm going to try to fill you out, see what you like, see if you want some more. That way I can kind of have like a daily type of thing that I do. And because my goal is to eventually get to like 50,000 subs. And in order to do that, I'm going to have to put out a lot more videos and good content too. So hopefully we can get to that. Hopefully you guys can help me out with that too and let me know. Because definitely on our journey to becoming better traders and learning the system and having a framework and obviously making money so we don't have to, work a 9 to 5, which is most people's goals with trading. I want to be able to provide free content and that's super valuable. So that's kind of my goal. Okay, so what I wanted to do with this video was kind of give you guys my market framework, essentially to give me an idea of what kind of scenario we could see for the next day or 2 or 3 days. Since I am a day trader, I really only want to know about the near future. I do pay attention to longer time frames, but that's just for my long-term portfolios or just kind of like I just want to get a general sense of where we are on bigger time frames, but I don't really pay attention to that too much as far as my intraday trading. Now, one thing is Gregory Mannarino. If you don't follow his channel, please go do so. He came out with his own little market risk indicator, which he calls the MMRI, the Mannarino Market Risk Indicator. And what it is the U.S. 10-year and the dollar multiplied by each other. So basically, like in this case, you would go 1.682 U.S. 10-year multiplied by 93.725. All right, you're going to multiply those together and then divide them by 1.61, and you're going to get a number between 50 and 400. All right, and what this is going to tell you, 50 is going to be the least risky to be long equities, essentially, and then 400 being the most risky. And it's going to give you a general sense of the market. Now, this has been extremely accurate recently because everybody's been extremely bearish, but this number has been sitting in the 88s to like 95s basically for like the last month. And it's essentially just been buy the dip scenario. And obviously people that, it took like 7 weeks to drop like 5%, and it only took like 3 or 4 days, maybe 5 days to get back to all-time highs. So I'm a believer in this, at least this market risk indicator, at least giving me a general sense of the market. Now, this is my first thing I look at. I just want to know what the market is like as far as risk goes. And the second thing I look at is 13 market moves, basically market framework that I use sequences and patterns, basically tracking the market move of SPY every day. And based on how bullish or bearish that sequence is going to give me more of a timing indicator for the next day or the next couple days. And so I really I use that just basically, so I got my main market framework, and then I've got my timing indicator based on the daily patterns, which is going to essentially give me an idea, a better prediction of what's going to happen in the short time frame. Because just knowing the general market environment is not going to help me tomorrow. So this is going to help me in the next day. And given the fact that I know what kind of environment we're in, so I got a context of the environment, and then I've got a timing framework for the daily patterns that happen. There's only 13 of them. And so what's nice about that, knowing that there's only 13, is that there is a process, easier to do a process of elimination of what kind of move you're in. If you know what kind of move you're in for the day, you can start building your trades based on the patterns that that develop basically every single day. So we're using that for timing. And then I'm also using this Mobydex as well. So these are kind of similar. These two right here kind of go together. The 13 market move sequence and patterns. And then this is kind of my market risk indicator just in general. This has been trending up Okay, so we're going to go through this real quick. This actually went to 98. It started at about 88 from October 13th, so it's been trending higher. So the risk to be long equities has grown, and it makes sense to me that the risk of being long equities has grown because we're running into all-time highs. Basically, we spiked through it today. We haven't been able to hold it, basically, but we basically took that out. So whoever had to stop there short got taken out. Okay, so that makes sense to me. So trending higher as we're moving into all-time highs. Basically, the risk of being long equities makes sense to me. All right, so given the idea that risk has been moving higher. Okay, so we're going to look at the 13 market moves pattern. So basically, we're in a pattern that looks like I wrote it down here. Hold on. So the sequence. Go back and look at my other video that I just put out, and you can understand what I'm trying to do here. But the sequence looks like this: 7, 1, 1, 13, and 4. So it's like the 5-day pattern of basically the type of pattern that happened during that day, whether it was bullish or bearish. Now these are 5 bullish moves in a row. 5 bullish moves in a row. That we're in, and we're actually more than that since last Wednesday, where it would be 6 in a row. But I'm only looking at the 5-day pattern here, and so we've got 5 moves in a row. Okay, so that's my sequence and pattern. The other thing is this Mobydex, which is from Unusual Whales. It has given us a reading of 12,686, which was, if you look back, this was just kind of tracking it like a like an RSI, I guess. The lowest reading was 16,409, which happened on July 21st, so quite a while ago. But just kind of looking back here, I just want to see what happened on the 13th, which was the Fed day. Pretty bullish day for Fed. Now, that was a pretty bullish day. And then kind of came down a little bit to the 19th. So let's go look at the 19th, which was... So even on the 19th, he had a bullish move that had happened, which this right here was a pretty bullish move. So you had a bullish move that happened on the 19th, and you had a negative reading. All right, so we're tracking this, and then we had the next day, which was yesterday, was a 1250 on the Mobydex. Now you got to look at this. This is basically it's tracking options quotes that have been flagged by the Unusual Whale algorithm. And so it's going to give you an insight into the most unusual volume that happened in that day. Now, Amazon, I think, did they have earnings? That's why they're at the top here. I'm pretty sure this always happens too whenever they have earnings. But anyways, so the reading was just off the charts. I mean, going all the way back to November 2nd. So we have an off the charts reading here, right at all-time highs, which is just super interesting to me because we literally have not seen anything like that since September 2nd. Now, what happened on September 2nd? Let's go back and look. You know what I'm going to do with this chart, though, since it looks so messy? Just get rid of some of this stuff here. All right, September 2nd, which was the last highest reading. Okay, very interesting. Our last highest reading basically came at all-time highs. Okay. All right. So my conclusion here, I don't really have a conclusion so much, but just kind of looking at the pattern here is a little different given that, look at all the divergences that built up into that last highest reading, which was on September 2nd. And then there was another bullish day, and then that was the top. So are we near the top again? I mean, we have less money flow here. We've just come off the bottom. I'm not entirely sure. We're going to have to see how this plays out. Now, looking at, I also do this. I look at the SPY levels. I want to see what small money's doing. Small money is essentially bearish. Pretty bear. 66%, 70% for the 5,000 level, 15,000 level, 77, and we're bearish here. So all the premiums on SPY right now are bearish. Okay, so we got at least for like SPY flow, it's basically 1K through 30K, it's basically all bear. Okay, so now we got a nice little reading into what's happened. What's happening. So now I'm looking at this pattern here. Now this pattern is super bullish, but this pattern is less bullish. Okay, the 4. It's a bullish move, but it's not nearly as bullish as these. So we got a weaker bullish move into an extreme overbought, I guess, overbought condition, right at all-time highs. And we've got all bearish flow on SPY, which doesn't, it could mean bull, because say all these bears here are just hedging. We don't really know. Typically, in SPY, people are just kind of looking to hedge their position. So, what happens is market keeps moving higher, and then these guys just all unwind their puts, which makes the market go higher. So we've got a pretty low reading on the market risk, but it is trending higher. And so very interesting setup into tomorrow that we've got going on. If it were me, I would definitely be leaning to the downside. I know it seems crazy to think we're so close to ripping higher, but I don't, based on what I'm seeing here, especially with what happened with, now we're going to look at, oh, they didn't have earnings. Okay, when is their earnings? The 28th. Okay, next week. All right. So this is going to be interesting, given that this was such a high reading too. This maybe accounts for maybe like 10,000 points of this. So this reading is really only like a 2,400 if you discount Amazon. So X Amazon, this is more like a 2,400 reading, which is way more normal. Okay, so that gives us a little better idea. That definitely changes the scenario. So Amazon is the key tomorrow, basically. So we're going to be watching Amazon very, very closely. Let's look at the structure of Amazon. It's right at last week's highs. It's bounced off it once, bounced off it twice. This is last month's open right here. So 3470 is going to be an interesting spot. Are they going to try and tag that right there? And so we've got this thing kind of boxed in here. And this is last quarter's open too, so it kind of bounced right there. So interesting levels. If they let this drop, it's a long way down. So in my mind, I'm going to look at Amazon here. I want to see what the flow looks like for Amazon. Because if there's a play like last week, which was pretty juicy, where you had basically sideways for 2 days into the Friday, and look what happened. So this was last Friday. I remember looking at this going, a lot of people made money this day. And I think these 3370s were going for like 7 cents, all right before this rip happened. And so are they trying to set up another day like this where they bust out of a level and we see some kind of ripper? Now it's definitely a different setup coming into this Friday. Definitely does not look the same here. But let's look at the flow. Bullish on the thousands, mixed 5,000s, bullish for 15s, and bullish for 30s. So they ended up pretty bullish, but it's pretty mixed. Bullish for tomorrow on the 15s, mixed for the 30s, bearish, and bullish. So overall bullish, but not overly bullish. So definitely we need to watch Amazon, given that it made up such a huge part of this Mobydex. Okay, so hopefully this helps you kind of get an understanding of how you can come into a day. Now, another thing I always look at is kind of like, what's the theme happening here? Who was the leader today? And I want to say that Russell, just given the fact that it closed higher, it hasn't quite caught up to all-time highs. This would be all-time highs right here. And so this is a little bit of a laggard, but it was stronger today. This was obviously weaker, and it hasn't quite made it back to all-time highs, the Qs. And ES, they popped all-time highs. So this was the leader for now, because it's just higher right now. and this would be second. This is third, but this was stronger today. So they're trying to play catch up. So essentially, I'll be watching RTY and Amazon for clues on what's going to be happening, and obviously Tesla, because I think Tesla is kind of the reason things are holding up in the first place. But okay, so hopefully this helps you guys with a little bit of an idea of what goes into the process of, kind of planning for the next day. And if you like this kind of thing, just let me know. Like and subscribe, and let me know in the comments what you think. Thanks. Peace.